Welcome back to Crypto's Ross. I am George. We're all George. So, as you can see, I am at the airport. My flight has been delayed, but there is breaking news. The Fed just announced, Powell just announced 75 basis point hike, the largest since 1994. So Powell is very, very, very serious about curbing inflation. Unfortunately though, this announcement is now bringing markets down. So since I'm here stuck at the airport, let's talk about what was announced. This is right before his press conference, so maybe there's more that will be said during the press conference, but basically overall summary has already been released. So let's take a look. So as you can see here, benchmark interest rate by 0.75 of a point, 75 basis point, the biggest increase since 1994. Okay, so besides this, what has changed? Well, according to this, the Fed's benchmark rate will end at 3.4% by year end. This is an upward revision of 1.5%. That is huge. That's a big jump. That's almost 50% higher. Also, the committee sees the rate rising to 3.8% in 2023, a full percentage point higher. So obviously, Powell, FOMC, and everyone else is very worried about the rising inflation, and they want to put a stop to this. But with this comes economic slowness, which is why you could see here in 2022, now it's anticipated that the U.S.'s GDP will only be up 1.7%, down from 2.8% in March. So there is a cost. There's definitely a big cost to raising rates so much, so fast, right? It's definitely going to slow down the economy. It's going to slow down borrowing. It's going to increase mortgage rates and lending rates. I mean, there's a lot that comes with this. Now, what else is there? Well, if you look at this is based on the fact that inflation has gone up so much. There's many different data points. For example, the personal consumption expenditures rose to 5.2%, right? And also CPI data that came out not too long ago, like a couple weeks ago, went up to 8.6%. So this is the reason why Powell has to be so aggressive, because every single data point that's measuring inflation is going in the wrong direction, not coming down, but overall going up. Now, we continue to read this article. What else does he say? Well, basically, the statement says that job gains has still been robust in recent months. Unemployment is still low. So these are things that he has mentioned in previous press releases or conferences. He's not afraid of raising rates right now because the job market is still good, according to Powell. Unemployment is still at a 40-year low. I think it's like 3.4%, something like that. There are still 1.9 open jobs for every unemployment person, right? So because of the labor force still acting strong, Powell seems to think that going very, very, very hard with rate hikes is safe. And it's more important to bring rates down, than worry about the stock market and worry about economic slowness at this point. Now, moving on, the long term, the committee outlook for policy largely matches market projections, and a fund rate to be about 3.8%, the highest level since 2007, right? And guess what happened at 2007? That's when the housing bubble happened, and we had, some not so good years, right? Going through anything else. The post-meeting statement removed the long-used phrase indicating that FOMC expects inflation to return to 2% objective. Ouch. So normally, what the Fed wants to see is inflation hover around 2%, and I've heard 2 to 3%, but they have removed that, which means they no longer expect that is realistic, that we may be hovering, even with all these rate hikes, we may be hovering, I don't know, at 3, 4, 5%. So they no longer expect 2% anymore. So that's not good. That's actually really not good at all. And going down, anything else? Yeah, consumer price index CPI went up 8.6%. I already mentioned that. The job market, 390,000 gain is the lowest since April of 2021, which we experienced a pretty bad crypto drop right around then. And then going through, that's about it. That's it. That was the statement. We have a 75 basis point hike to look forward to. That is coming. Well, what about next month? What about the meeting afterwards? We don't know at this point, but obviously this is a drastic shift from what was announced before, and we'll see if more comes out of this meeting that Powell's about to have in terms of what may be coming, and we'll see what he said during the Q&A. But overall, it's better than having a 100 basis point hike. That's what some were predicting. 75 basis point is above expectations, and the market is definitely reacting to it. But I think people will be keen on what he says during this press conference. All right, guys, that is it. Just want to cover this real quick. So smash the like, subscribe to the channel, and I'll see you guys tonight. Make sure you tune in. All right, have a good one. Bye-bye.